volumes?
Well, it was a very low volume day, especially on a day where we did see the Reserve Bank meeting on interest rates. And if we have a look at volumes, just $3.7 billion being traded. So that would have been soft even for the start of the week, let alone the second trading session of the week. Of course, today was the RBA interest rate meeting. It's interesting to note that when we saw the last meeting, the Aussie dollar was at 102.8 US cents. Of course, now we've seen it falling below 97 US cents. So that's a fall of 5.5% in the past month. And of course, the market also reflecting that movement in the Aussie dollar as well. Over the last 1 month, we've seen the market down by 5%. Some of that's probably repatriation by overseas investors. But those companies with earnings offshore have been beneficiaries. We've seen stocks like Brambles up by 4.5% the last month. We've seen News Corp up by 7.5%. And QBE Insurance has actually gained 15.6%. I guess on our market, we did see our market making losses earlier on in the session, but the fact that we are seeing Japan gaining more than 2% after a slide of 3.7% yesterday has been a positive. On the downside, though, we did see some of those defensive areas being sold off. We saw consumer staples as well as utilities, some of the worst performing areas, and these are some of the highest yielding areas on the market as well. Staples has a yield of 3.7% at the moment, and utilities has a yield of 5.1%. So we did see a bit of selling in some of those defensive areas, but on the flip side, the material space, the best performing area, a bit of a bounce back in commodity prices overnight helping that sector. But all in all, it ended up being quite a quiet session on the Aussie market.
Stephen, broader index, the iron ore miners really having a standout session. Fortescue up over 6%, Atlas up over 8.5%.
Has bounced back, and that was fantastic for the iron ore miners. But looking at the Aussie dollar, it was interesting that the RBA decision today, we saw a slight rise in the Aussie dollar, but just what's been happening while we've been on air, we've seen a massive tumble in the Aussie dollar. This is the Aussie dollar live, and you can see that just in the last half hour, we've actually seen the Aussie dollar losing 0.5 cent. So we're seeing some big movements in currency just as we're speaking, and this is outside of the RBA interest rate decision. Of course, the interest rate decision happening here, and of course, overall, we saw a bit of a lift in the Aussie dollar. So it does look like some big movements happening in terms of currency at the moment. Going back to iron ore prices, though, this is one of the key supports of the Aussie market today, and it was strongest for those companies which are highly leveraged to the iron ore price. We have a look at Atlas Iron. It was up 8.5%. We saw Fortescue up by 6.1% and Rio Tinto up by 2.5%. Yesterday, we did see the April trade numbers coming out of China, and if we have a look at the iron ore imports, those numbers were very strong, 67.2 million tonnes. So that was up 4% on month and up 16% on year, and still near record highs. Of course, the concern around this area is that the third quarter is usually represents seasonal weakness. So we are probably seeing a peak in iron ore demand for the year, and I guess that leads to a little bit of nervousness. But for the time being, we did see a strong bounce back in iron ore prices. Of course, one of the things that we're watching is Rio Tinto. It is looking at selling off its stake in Canada's largest iron ore miner, which is Iron Ore of Canada. And I guess just a bit of speculation that Rio Tinto is looking to reduce its iron ore exposure because, of course, it gets about 4/5 of its earnings through iron ore at the moment. And with the volatility that we've seen in that commodity, it's probably looking to diversify its earnings base a little bit more.
Yeah, Julia, a slight uptick in the iron ore price overnight, helping to, I suppose, stop the trend of a lower price. Does it give you hope for the short-term outlook for the iron ore price and the iron ore miners, or it tends to be rather volatile?
Well, if we have a look at iron ore prices, they're down 30% now from the peak that we saw in February this year. So it has been a very steep slide. And if we have a look at the material sector over the last 2 years, we've actually seen negative earnings growth coming through from that sector. I guess some of the things that we're looking at in terms of iron ore and what's going to impact on prices is both on the demand side and on the supply side. On the demand side, we know that China is growing at about 7.7% still, but the 10-year longer-term growth target is at around 7%, and the market's still adjusting to those numbers. If we start to get some more optimistic numbers coming out of China, that would be positive for prices. And of course, on the supply side, there's still some pretty ambitious plans from Rio Tinto, BHP Billiton and Fortescue in that Pilbara region. So we are going to see an increase in supply as well. So those are the key factors to be looking at. I think the April trade numbers coming out of China yesterday were a positive for iron ore prices overnight because they did show that iron ore demand is still relatively strong at the moment, and we saw iron ore prices up by 1.4%.
Steve?